Howdy, Team 42. It's your skipper here, Darius Dale, to present our macro minute for Tuesday, October 11, 22. We're going to switch it up a little bit for you today. So we're going to focus on something we're going to highlight from our leadoff morning note each morning. Just out of respect for our paying subscribers, we're only going to focus on the medium term or long-term key takeaways, because the short-term key takeaways where we generate our positioning signals and our flows-based tactical trading signals, we find that to be the most value added. So we're going to steer clear of that, but just kind of focus on a little bit of something I think is really important that I think is contributing to U.S. dollar strength, which is, the leading survey data that we continue to get across the globe continues to support a couple of themes that we've been highlighting in our research of late, which is number one, persistent U.S. exceptionalism, and number two, APEC, Asia Pacific, ex-China economic outperformance relative to Europe. Both of these dynamics are likely to continue perpetuating U.S. dollar strength over the medium term, as well as rotational flows into Japan and Australia at the expense of Europe among DM money managers. The work we did in our October 22 macro scouting report, I want to say last Wednesday, really helps us understand the fundamental drivers of dollar strength, not just obviously the momentum market-oriented drivers, but the fundamental drivers. If you look at the terms of trade shock we're seeing in Europe, the fiscal policy shock, the negative fiscal policy shock we're seeing in the British and the UK, and then obviously the monetary policy shock on a relative basis that we're experiencing in Japan. All three of those things are perfect explainers for the weakness that we're seeing in the Japanese yen, the euro, and the British pound. So we're likely to see a big reversal in the dollar over the medium term until one or more of those dynamics really starts to reverse. But as I mentioned this morning, the data is suggesting those dynamics aren't reversing. So just a quick tip of the cap towards U.S. exceptionalism. You have the U.S. NFIB headline index, small business optimism index, come out this morning, accelerated to 92.1. That's the highest reading we've seen since May. This is a September print. Hiring plans ticked up, CapEx ticked up, CapEx plans ticked up, inventory accumulation ticked up. So it's a pretty solid report. If you look at the internals as well, you had Australian consumer confidence tick up, Australian business conditions tick up, and then Japan's economy watcher survey, the headline tick up as well in the month of September. Those are September data points. And then Europe's, lagging, bringing up the rear. The Centix economic confidence index, that slowed to, what number was that? Minus 38.3. That's the lowest print we've seen since May of 2020. So Europe's really just cratering like a rock, dealing with the energy crisis and the rationing and all that stuff and how that's flowing through the economy. So just all told, it's very clear that the modal outcome, at least in the U.S. economy, with respect to this U.S. economic resilience narrative, the modal outcome is not yet an actual recession. Hashtag actual recession. Definitely go check out our research if you want to understand what I mean by when I say that. And until a hashtag actual recession becomes the modal outcome in the U.S., it's likely that investors are going to continue to lose money on the long side of bonds because they're focusing on the narrative around a recession, and they're not focusing and doing the research on the numbers that would actually lead to a recession, and they're very much not doing that at the current juncture. Shifting gears to my loan mode dashboard. So just going down the global macro list here, U.S. dollar index, the Bloomberg dollar index, that's still bullish from a medium-term price momentum perspective, kind of in the middle of the range there. Gold, bearish from a medium-term price momentum perspective, that's in the middle of the range. 10-year Treasury, that's bullish, kind of in the middle of the range there. S&P 500, bearish, getting close to the lower boundary of the range there, but not quite. VIX getting close to the upper boundary of the range there, but that's still bullish, but not quite. NASDAQ 100, that is bearish, not quite oversold yet. Russell 2000, that's bearish still, not kind of in the middle of the range. Bitcoin, bearish, not quite in the middle of the range there. Ethereum getting close to oversold here. So Ethereum, that's bearish here. Let's pull up the chart on Ethereum. Let's see. Let's check you out. Yeah, Ethereum's pretty close to being oversold. Very narrow range, and that narrow range, we talked about this over the last almost couple of years now. Whenever you see that range narrow in crypto, that's usually not a good leading indicator. Crypto tends to lose volatility when it's in a bear market and gain volatility on a realized basis when it's in the bull market. So it's not necessarily a extremely positive setup here, but certainly if you've been short crypto in the options market, or you haven't been allocated to Ethereum and you're a dollar cost average based investor, this would be a good spot to start dollar cost averaging into that particular exposure. Shanghai Composite, that's bearish, pretty much oversold here as well. Shanghai Composite finally getting to a level where you probably offload some short exposure there and wait to reshort higher. To crude oil, that is neutral, getting close to overbought here. Pretty interesting. The market is not necessarily taking that OPEC production cut news as well as one might have thought. And Eric Townsend, shout out to him on Macro Voices last week, really sort of went into detail in terms of how the production cut is not really a production cut. It's more like a reduction of the quotas, which they weren't already under. They were underproducing relative to anyway. So it's not really a production cut. If you do the math on the individual country basis, and again, I'm citing his research, so definitely go check out that episode. If you do the math on the individual country basis, I want to say it only amounts to like a 600 or 800 barrel per day production cut. So not a huge move. And I think the market is appropriately responding in terms of not, breaking out back to bullish from a medium-term price momentum perspective. Although I do believe that is the biggest risk for Q4, given that headline inflation has been one of the positive fundamental drivers, both in terms of contributing to U.S. economic resiliency, but also preventing the floor from falling out of risk asset prices. And then lastly, ags, that's been neutral. BAM's getting close to overbought, but not quite there yet. And then bearish. Industrial metals are still bearish in the middle of their probable range. Shifting gears to my global macro dashboard, we got about 300 ETFs in here represented across. Each of these represent individual factor exposures from a global macro perspective across every major liquid asset class. And I sort this every morning for you guys and gals in terms of the range view. And so what that range view, the white line there, just shows you what the last price is relative to the trading range, the fractal range there. And so I scroll to see if there's anything that's signaling, hey, I'm very overbought this morning, or scroll down and see, hey, is there anything very oversold this morning? And as I mentioned earlier, Ethereum, that is oversold, again, oversold signal there in Ethereum. Let's see, New Zealand, that is bearish, oversold signal in New Zealand. So this is be something you'd be covering shorts to the extent you have been short New Zealand here. And then lastly, China's bearish. This is the CHIK. This is China Tech ETF that is bearish. A lot of folks on the buy side, hedge funds, are very much short China Tech exposure. So if you're listening to this and paying attention, definitely this would be a good spot to be offloading some of those shorts. You can always reshort higher. Looking at this ETF, the upper boundary of that range is 15.59. So with that, Darius Dale presenting our macro minute for Tuesday, October 11, 2022. Best of luck out there. We'll catch you back here tomorrow. Cheers.